Hi, it's been a while. Welcome back to Growing with Daisy. And today I just want to talk to you briefly about investing in mutual funds versus investing in federal government savings bond and the treasury bills. So, for those of you who have been following my channel, you know that I have spent the last 6 months investigating how to multiply my money because honestly, I don't like working hard. So let the money I've already worked for, let it work hard for me now. So that's the process I've been undergoing. And I know I've not posted in a while. I've been very busy. I've been learning new things, but let's just share this thing about the savings bond because the month is about ending and we're going into the new month, and we all know that the subscription. Okay, for those of you who are not aware, the subscription for the federal government savings bond comes up the first week of every month. So while we're preparing for the November's subscription, I just want to share a few thoughts with you about how well this thing has been working out for me and if it's something that you should consider for your portfolio. So let's start with the big one, the federal government savings bond. Now, why do I like the federal government savings bond? Because it's a fixed interest bond. So if, for example, when I started early this year, it was 19% per annum. And the second subscription was about 17% per annum. The third subscription was 15% per annum. You see that it has been depreciating. And I'm very certain that November subscription would be around 14% per annum. The good thing is I am still getting paid my dividends based on what the interest rate was when I initially bought the bond. So I initially bought it at 19% per annum. And when my coupon came in the middle of the month, it was at 19% per annum. So the advantage to the federal government savings bond is that you know how much you're going to make every month. Now, it's not paid monthly, it's paid quarterly. Like every 3 months, you get paid a portion of your coupon. So if you're earning, let's say, 15% per annum, that 15% will now be divided into four. So every 3 months, you get paid a quarter of your 15%. You understand that, right? Okay, so the good thing about the federal government savings bond is that it is fixed at whatever rate you bought your coupon. So I bought mine at 19% and I'm receiving my quarterly rate at 19% divided by 4. And I spread it out. I told you guys in an earlier video, you can check the description for the video, that the best way to invest in this federal government savings bond is to spread out your investment over 3 months so that every month you'll be receiving payment from the federal government. So you can choose to work or you can choose to leave off your investment. I will advise you to continue working because the money, unless you're putting in like 100 million a month, I don't think the money is enough for you to leave off your investment. So you continue working, and if you can, you reinvest your coupon payment. I'm not reinvesting my coupon payments this year. I need that money for stuff. But from next year, I'm going to be reinvesting everything that I make. So every month I get paid, and the payment is, is relative to what you put inside. And I think it's one of the safest investments available because at the end of the 3 years or 2 years tenure, as the case may be, you get back your capital in full. So I know for certain that at the end of 3 years, I'm going to get back my money in bulk. Of course, I'm going to reinvest it. I have no intentions of spending it. And that gives me a safety net. So I know that, no matter what I'm doing, I always have money coming in somewhere. And it allows me to explore my options. I can choose to work. I can choose to take some time off to write my books or to do other things that I really, really enjoy. So that's a federal government savings bond. Now, the next one is treasury bills. Treasury bills is just like federal government savings bond. The only difference is that while the savings bond is 2 years, 3 years tenor, the treasury bills are like 90 days, 120, 150, 270 days. It's not up to a year. And their interest rate is slightly lower than the savings bond, or it's about the same thing right now. It's not even slightly lower. It's not slightly lower. It's not slightly higher. It's about the same thing. You're still going to get from 15% to 19% per annum, no matter the regime that you choose. So the good thing about treasury bonds is that, okay, let's assume you want to subscribe with 100,000 naira. Like after you've done your expenses for the month, that's the money that you have available to invest. You're only going to put in 90,000. okay, because it is sold at a discounted rate. So once you put in your 90,000, at the end of your 90 days tenure, or your 120 or your 150, 170 days tenure, as the case may be, you will get back, say, 100,000. So that 10% is your discounted value. It's not always 10%, it could be 15%, could be 17%, could be 19%. At one time, it was even as high as 20%, but it's not that high anymore. So you'll be expecting between 12 and 15%. And you get your money back quickly. Now, the interest is prorated. Oh. Don't think you get 15% per annum under 90 days. No, you get the prorated version, the prorated amount for how much you will get within that 90 days from that 15%. That's what you're going to get paid. So why do I prefer savings bond? Like I said, my money is held in bulk. It was money I did not have use for at the moment. The money just came like that. And the tendency to spend the money was high. So putting it in savings bond, I know that in 3 years' time, that money will still be there in bulk. It will have appreciated, and I will be able to use it for something useful. Treasury, on the other hand, if it's money that maybe you want to use for your house rent, yeah, like you're saving towards your house rent, I would advise that you put in the treasury bills instead, so that when your house rent is about to expire, you can cash out your treasury bills. You'd have made a little profit and you'll be able to pay. I would never advise you to just keep your money in the bank, because all those 50 naira that they are cutting, I don't want to call my bank name, but those people that once you walk past their bank, it's as if they've deducted money from your account. Exactly. Those are the people I bank with. I don't trust them with my money. I mean, how much will remain from my house rent? Anyway, okay. Like most of you know, I don't pay. I have been able to, God has been good to me. I've been able to get my own apartment, my own personal apartment. So house rent is not my issue anymore. But still, paying for school fees is expensive. Oh. So of course, I use treasury bills because I know that I can predict when the money is going to come out, and I can easily pull it out and pay. So that is, we've talked about the savings bond. We've talked about the federal government treasuries. Now, the one that excites me the most, I know that the one that excites most of you also, is this mutual funds that we're always hearing about. They say invest in mutual funds, invest in mutual funds. Okay, now what is this mutual fund? That all right, let's break it down. Now, I am not a financial expert. I stumbled on this thing by accident, and I'm doing it and it's working for me. So any advice I'm giving to you based on what I have experienced. Though. I'm not giving you any advice as a financial advisor. Please go and find your own financial advisor. Don't take random financial advice from random people on YouTube. But you can click like my channel, and like it, so that I will have more subscribers and more people will get to hear what I have to say. So mutual funds. Now, how do you go about purchasing mutual funds? Personally, I don't like walking into banks. I don't like businesses. I really don't like people like face to face. I don't mind talking on camera, but I don't like face to face. So how did I purchase these mutual funds? I use two apps. Both of them are from the same company. I use an organization that has been in business for 30 years. So they are tried, tested, and trusted in the Nigerian business space. I'm not advertising for them. They're not paying me a dime for this. But this is what I do. So just Google Afri Invest. They've been in business for like 30 years now, and they are a reliable company. They have two apps. Afro Investor 2.0, which is the one I use to purchase my treasury bills and commercial papers and the savings bond. And they also have Optimus by Afri Invest. Now, Optimus is where I purchase my mutual funds. They have several mutual funds in the Optimus app, but the two that I use regularly are their money market fund and their equity fund. The money market fund is the Plutus, I think that's how they pronounce it, Plutus fund, and then there's the equity fund. Why do I like this one? The money market fund then is like 17% per annum. It's a fixed rate. So every month, that savings I used to save in a contribution and all that you're not making it interesting. Every month I put my own savings of about, it's not much, about 10K every month. I mean, my salary is not that much now, but seriously. So I put my 10K into the money market really justly every month. And every quarter, they reinvest my profit. That one, I don't touch it at all. Whatever money comes out is reinvested and I still earn interest in it. So that's the money market. That is my safety net. That's my retirement fund. The real exciting one is the equity fund. This year was a revelation because We keep hearing about the Nigerian stock market. You want to pick stocks, you don't know how to invest in stocks. Leave stocks first for the professionals. You're not yet a professional. So use an equity fund instead. Now, the equity fund this year we have done, or rather they have done almost 90%, like 90%. When I bought my first shares in the equity fund, it was 366 naira per share. As we are talking today it is 600 naira per share. And I mean, the growth in equity is so massive. Yeah, so it tanked at one time, like the thing dropped. Every day you wake up, you look at your app, you're seeing like 20K down, 30K down. It's a scary thing. But if you ride the losses, you'll find out that the equity funds, as because it's tied to the Nigerian stock market, right? And the Nigerian stock market is amazing at this time of the year. So your equity just keeps on growing and growing. And you can make a lot of money if you have the money and the patience to put inside. Like if you check out my other video, I'm going to put the link there. I told you guys what happened to my own equity fund and how I had to pull out money from it to furnish my house and all of that. But I started reinvesting in it, right? It was a painful experience. I learned painfully that you do not invest when you have a project ongoing because, yeah, well, let's skip that. But it was a very painful experience. For you that you have money, you have cash at hand right now, instead of planning dirty December, why not just pack that money and throw it into your equity fund? And let's see, because analysts are predicting that we're still going to have a very strong bulls market till December this year. So put it in the equity fund, let it grow a little bit and you'd reap your rewards. But for those of you who are on the more cautious side, you don't want to lose any money, put in the money market fund. At 17% per annum, you're getting a great return for your money. Remember, I'm not being paid. I'm not advertising this for anybody. I'm just sharing my insights with what I have experienced and what I have enjoyed investing in Nigeria. So the question that some of you keep asking me is, which do I prefer? Now, for growth, I prefer using the money, the equity fund naturally for growth. But it is scary. It is scary. So I only put in money that I know that if I lose, it will not pain me too much. But however, to preserve my capital, because I have a project that I intend to embark on in the next 3 years, it's going to be a massive project. So to preserve that capital, to build towards that capital, I put my money in the federal government savings bond. I know it is 17% per annum, and I'm going to roll it over for the next 4 or 5 years. It's going to just stay there, it's going to breathe. And when I am ready to pull out my funds, I'll be able to pull it out in bulk and do the business that I want to use it for. So there you have it. Those are my 2 cents on how I invest in the Nigerian investment space. I don't do any risky investment because the money never long like that. But next time, maybe next week, if I'm able to post next week, I will share with you something new that someone just introduced me into. It's they call it a real estate investment trust, REIT. I have not investigated it completely yet. I'm just about to put money into it. So when I put the money into it and I see how it's going, I'm going to give you guys a heads up. And like we do on this channel, we'll all just grow together. So until next time, wait, oh, you have not yet clicked like, or you like this video now, like it for me, subscribe and share so that the algorithm will push it out to as many people as need this information. All right, so until next time, keep growing, keep learning, and we would all become wealthy eventually one day.